it, and let's hear what you have to say. Thank you very much for being here.
Yeah, thanks so much for having me on today. I think it's great because last time around we discussed like maybe rights can branch out a bit, and I think my paper probably can serve as a bridge here, because we are not like focused on terrorism per se, but rather on violence against environmental activists. But I guess I'm getting a bit ahead of myself. So let me first give you a brief motivation why we believe this topic is not only interesting, but also really important to look at. Multinational corporations can be viewed as global political actors. In fact, their economic power often rivals that of national states. So just comparing revenues of corporations and governments reveals that in 2017, 69 of the top 100 spots were actually occupied by corporations. And what is important about the setting where multinational corporations operate in is nicely summarized by this quote of John Riggi, the father of the guiding principles of business and human rights. Globally, there is no central regulator, and national laws where multinationals operate may be weak, poorly enforced, or simply do not exist. And what is also really important when considering multinational corporations is that while they constitute an economic entity, they are not a legal entity in that sense. Rather, they are made up of a complex and often opaque web of subsidiaries, affiliates, joint ventures, and other contractual parties. So the question that jumped one too much. The question that arises is what happens when multinationals engage in any kind of corporate misconduct, especially if this kind of abuse happens in countries where the institutions are weak, or even government actors might be complicit in the abuse. This reflects a canonical problem of global governance, and we argue that civil society here plays a crucial role to kind of act as a counterbalance to multinational corporations. Civil society has been shown to be indispensable in holding powerful actors accountable, as for instance in Acemoglu and Robinson's new book, The Narrow Corridor. And from a global perspective, we can think of transnational civil society to be even more critical, as there is this legal vacuum left behind by international human rights legislation. There is no central authority to govern multinationals. In our study, we consider a pivotal form of transnational civil society, namely human rights organizations. And to understand the role of human rights organizations, their role is basically informational. I like this picture painted by Kreitmeir, who says they can be viewed as a conduit for disclosing information on perpetrators to the public. Human rights organizations are also basically a global civil society par excellence, because they exchange and mobilize information between different NGOs, HR groups, grassroots movements, journalists, and other non-state actors. So it's really a transnational network that is at work here. And they often, like one of their key strategies is called naming and shaming, which basically means publicizing and naming perpetrators in the media. And the literature has so begun to explore how this kind of information mobilization strategy actually affects national governments, but yet we have not the answer how does this kind of human rights spotlight affect multinational corporations. So the big picture question that we try to address in our paper is how and if global civil society can hold global companies accountable in the absence of a central authority and legal institutions. What's the impact of this human rights spotlight on the named perpetrators, and where might human rights organizations run into walls? Where are the limits of the strategy? To be more specific, so what do we look at in our study? We really focus on this information strategy by human rights organizations, namely informing and publicizing the abuses of multinationals through the media. We do so by focusing on the assassinations of environmental activists and identifying the companies that are named in the source articles, which we classify as being associated with the event. We then use event study methodology to kind of gauge the effect and the efficacy of this informational disclosure on the asset prices of named corporations. So we look at, well, how do financial markets react in the aftermath of these events? Why do we focus on this specific setting? So assassination events have several advantages here. First, they constitute an unambiguous human rights violation. So compared to, for example, to arrest during protest, where one side might always claim, well, there was some riots, so it was justified to arrest these protesters, assassinations really leave us, or leave no moral wiggle room, if you would like. And because these assassinations often are targeting high-profile activists, they are likely to be reported in the international press, or human rights reports, which makes it actually possible for us to pick those events up. And this is really because they constitute a focal point of international activism. Human rights groups use these specific and discrete cases to make this abuse concrete. And they also use it because these stories may emotionally engage the reader. From a methodological perspective, this kind of sharp and clearly defined and discrete structure of these kind of assassination events also has the advantage that we can actually use event study methodology, because we can really pinpoint the date when it happened. Why the mining sector? So we argue and strongly believe that this is this kind of tension between activists and mining corporations is indicative of the general tension and conflict between actors in civil society and multinational corporations. It turns out that the mining sector is actually the deadliest sector for environmental activists. So here on the right-hand side, you see that since 2004, the number of reported assassination events related to mining opposition has increased manifold. Again, from a methodological perspective, the mining sector has the advantage that it's a really capital-heavy sector. So mining corporations, in the vast majority, rely on financing through equities, which makes it possible for us to use asset prices to identify the efficacy of the information mobilization strategy. Just a preview of the findings that I'm going to show you. We find that financial markets actually respond quickly and negatively to the disclosure of corporations in association with assassination events. We find that this kind of strategy is really not cheap talk. There are significant losses involved for the corporations. We estimate that the median cumulative loss in market capitalization in the 10 days following the event amounts to over $100 million US. We then look at more closely at the role of the media. And we focus, and what we try to do is here really to kind of compare if the events are more prominent, if we expect events to be more prominently featured in the news versus where they coincide with other competing news stories. And we find, in line with our expectations, that if the event coincides with a low news pressure days, we still find the significant negative abnormal returns for corporations. But when the event coincides with other competing news stories, we find an effect indistinguishable from zero. We then ask the questions, well, who are actually the investors that react to those kind of events? And we know from the literature that institutional investors are often responsible for driving share prices because they actually own a large ratio of the outstanding shares. Moreover, they have been shown to actually care about corporate social responsibility, at least in the last couple of years when this kind of thing really became popular and investors started to care about environmental and social responsibility. And we find that actually it are those kind of institutional investors that are news sensitive and sophisticated. In our example here, hedge funds that react significantly to the news disclosures. Next and last, we turn to the questions, well, given that there are such significant losses involved for corporations, why do we keep observing those events so frequently around the globe? And one possible explanation here is that there is a third actor that has a financial incentive in eliminating the mining opposition, but does not only partially bear the costs of the stock price movements. And we find actually that the probability of observing assassination events in relation to a company is positively related to the company's relative importance as a revenue source for the domestic government. So this kind of hints at the fact that there is actually that there might be a third actor that can help us explain why we keep observing the events despite the significant losses involved. So here's just a quick roadmap for today. And so one of our key contributions really is here to the collection of this unique data set of killings of environmental activists. And this is what I would like to dive into a bit more and present to you. So we really here for our study rely on two key pieces of information. First, the assassination events, and second, the publicly traded corporations that are associated with those events. What kind of assassinations are we looking at? So they need to satisfy two criteria. They need to be publicly reported either in international media outlets or by human rights groups. And the source article needs to make a clear link between the victim's violent death and his or her opposition to mining. This really turned out to be yes.
Can I ask a quick question? What's considered an international media outlet? Like, is it like a set of newspapers, for example, the New York Times, the Guardian, or is it like a fixed set of papers?
So we really do not restrict our priori like the potential or news sources. But so I guess international media outlet, and I guess that's what you're asking, might be a bit like vague, and especially so we do not only consider newspapers that are also sold like in many different countries. So it can also be national newspapers, for example, in Peru, La República, or in Colombia, what El Independiente or something like that. I forgot the name.
Yeah.
Like another left-wing newspaper that cares about those abuses of environmental activists. But yeah, but the good thing is those they are also usually, but we also have The Guardian is heavily featured, which I will bring an example in a second. Then International Herald Tribune. So we really used news stumps and news archives and queried them strategically. And we also relied on manual search online, going through all kinds of newspapers that might be featured also by Factiva, like those that I just mentioned, but I forgot the Colombian one. So, so it's a broad, really a very broad set of newspaper.
So you use like a GD kind of stuff that looks across several countries and several news outlets to come up with a database.
Yes, yes. It is really, it was a heavy manual effort by really querying. This was partially or semi-automatically, and then but also to use Google and to use those specific cases that you find in human rights groups reports where you need more information, and then search all kinds of archives and also Google sources to really locate what was going on, to kind of establish this connection to mining opposition, and also to locate the corporations that might be associated, that are named as being associated in the article with the event. But I will explain a bit more in a second what we mean with being associated. So yes, I guess I already, so one of the big issues here really is that this data is not publicly available. Even if some human rights groups code this kind of data, they do not publish it. And it is, if it's published, it's highly aggregated. Moreover, they miss key information that we use in our data, in our study, and for our identification strategy, namely the corporation links. In total, we identify 354 assassinations that identify our satisfy our two criteria, and we then code, among others, the following key informations: the location where the violence occurred, the precise event date, and the mining companies, if there are any, named in relation to the event. So this might be a bit abstract, all like what is going on and what we are doing. So I brought here in one example case to illustrate our coding process. So this is an excerpt from a Guardian article reporting on the killing of an indigenous leader in Ecuador in 2014. And here we see highlighted in purple and blue that the article makes a clear link between the victim's death and his opposition to the Mirador copper and gold mine. And while it is not here stated in the excerpt, the Guardian article then links to a human rights group report, which identifies the owner, clearly identifies the owners at the time of the event of the Mirador copper and gold mine, which are the publicly traded Chinese-based corporations, China Railway Construction Corp and Tonglin Non-Ferrous Metals Group. And those two corporations are then classified as being associated with the event in our dataset. So this is how we construct these links and the cases that we are focusing on. Any questions regarding so far to the coding process? Any more questions? No, great. Then I'll move on. So here, what this graph, what I would like you to take away from is really the global scope of the events and also the corporations. And we see here in the left column that the Philippines, Peru, Guatemala, and Colombia emerge as the deadliest countries for mining activists. And what is also really important, most of those events, or the vast majority of these events, are associated with publicly traded corporations that are headquartered in Western countries, namely Canada, the UK, and the United States. And in those countries, until recently, to be exact, until 2019, any kind of cases and lawsuits brought forward against multinational corporations for abuses abroad have led to little to basically no success. Just as an example, until 2019, the Supreme Court in Canada has rejected any kind of these cases. And 2019 was the first time a case was heard against a company for human rights violations abroad. So this really highlights that there is this kind of legal vacuum, and there is no real central authority that governs multinational corporations, especially in the global periphery. Next, I would like to introduce some the event study methodology in finance, and because not everybody might have encountered event study methodology, at least in finance. So let me define a couple of key terms that I will use throughout the presentation. First, abnormal returns. Intuitively, in our setting, you can think about those as the difference between the observed return for a mining company and the return we would have expected to see for the corporation had the assassination event never taken place. So what we need is a model for the expected return, and in line with the literature, we estimate a standard market model over an estimation window. So this just means we regress the observed return on a constant and a market return. The market return in our case is the MSCI market index where company I is listed. And the cumulative abnormal returns are then, the hint is already in the name, are just simply the cumulative sum of the abnormal returns over a pre-specified event window. So these returns are basically, so the abnormal returns and the cumulative abnormal returns basically captured the part of the observed return that cannot be explained by the company's relative performance to the market in the past. And as we like to do in econometrics, to draw overall inference on the effect of assassination events, we average cumulative abnormal returns over all company event pairs N. So next, I will present the classic event study results. So here, we really ask the question, well, how do financial markets react? And we apply several state-of-the-art test statistics to really trace out, do these kind of abnormal returns that we find really constitute an aberration? Are they really abnormal? And here, without going into too much detail, because it would really go too far for this presentation, I would like to focus your attention on two columns. First, the mean cumulative abnormal returns that we estimate, and in the last column, the crank test statistic. This is a non-parametric test statistic, which has, apart from the, has the big advantage apart from the fact that it relaxes the really strict normality assumption on returns, that it has been shown to be the best performing test statistic if the exact pricing of the event is a priori not known. So in our setting, we know when the event actually took place, but we do not know when the market gets this kind of information, especially since the information is quite sensitive. So imagine that, as in the case of the indigenous leader in Ecuador, he gets abducted on the 28th of November, but the body is actually found only several days later. So the market might get the information only after several days. So this test statistic has been shown to be the best for these kind of uncertain pricing events. But now to the actual estimated effects. So we see that on the event day itself, we do not find a significant abnormal return. But then we see a drop on the next day, followed by quite a stable period over the next 3 to 4 days, followed by another significant drop over the following 4 days. And after 10 days following the event, we estimate a cumulative abnormal return of about 2 percentage points. This kind of market behavior is really consistent with that the market needs time to absorb the information and also to assess the risk for the corporations being named. So it needs time to really assess, well, how will this publicity and this disclosure of the name really affect the corporations? And we also see that these cumulative abnormal returns are highly significant also throughout those test statistics. One question that arises, well, even given that there's quite some geographical and temporal dispersion of these events, well, are these corporations maybe already on a downward spiral? And so what we do is we look at accumulative abnormal returns prior to the event and aggregate backwards. And we see that while slightly negative, these cumulative abnormal returns are nicely centered around 0 and never significant. This also means that the market does not have any prior knowledge of these events taking place. And I think there is a hand raised.
Yeah, thanks. Very short question. Do you look at weekdays or trading days after the event?
So we look at trading days. So the event day is defined in trading days as the first day, trading day after the event. So if the event happens on a Sunday, we move the event to the event day to the Monday, which is then the first trading day.
Okay, thanks.
No worries. Any more questions related to the classic event study results? Okay, great. Then I'd move on to the OLS regression results. And here, so one question that might be in your mind is like, well, but might there be something else going on in the event country? Might there be just a general outburst of violence, or might the event just affect the sentiment towards the mining industry in the event country in general? And so we here employ quite an intuitive OLS estimation strategy. Well, what we do is here we compare the cumulative abnormal returns of two types of publicly traded mining companies. First, the companies that are treated in our sense, that are named in the source article as being associated with the event. And then we introduce a control company sets, which are those corporations that are operating in the event country at the time of the event, but are not linked to the event itself in any of the news articles or human rights reportings. And as already mentioned, this kind of strategy has several key advantages. We can account for for contemporaneous events taking place, like economic or political shifts, countrywide outbreaks of conflicts, and for a general sentiment change towards the mining industry following the event. And we can even deal with the idea, the rationale brought forward by Goudelin and LaFerrara in their 2007 AR paper about the market reaction to the end of the Angolan civil conflict. And they show that these corporations have a comparative, or mining corporations have a comparative advantage in operating in these kind of politically tumultuous and violent environments. So this is quite neat about our control companies, that we can also account for this.
David,
so
before you jump, before you jump into the OLS, I was just wondering if you are able to look at the days leading up to that event in the event study case, to look for, well, to look for the parallel trends or something.
Yes, or maybe I was too fast here. So here we see that, so these are the cumulative abnormal returns before. So we see they are never significant, but you will see that even more nicely in compactly in a second in the main figure of probably of our paper. So here just if that is not clear, just raise your hand in a second again.
Oh, sorry.
So here just the formal specification. So we regress the respective cumulative abnormal return on a constant and a dummy variable equaling 1 if a company I is associated with an event E and 0 otherwise. In our baseline specification, we also control for company characteristic that might have an impact on the observed relationship between returns and our treatment dummy. In our baseline, we control for size and leverage. For instance, one could imagine that companies that are highly leveraged or smaller might be more affected or will be treated differently by the market if such an event happens in relation to a project of theirs. Further, we also control in our baseline specification for event fixed effects, but we relax some of those assumptions. We control more for nonlinear effects of our covariates and also introduce profitability. And one disadvantage of using event fixed effects in this setting is, well, it kills off really a lot of the variation in our data. So what we do is we also present results if we include no fixed effects, headquarter fixed effects, year fixed, and leveraging really the nice structure of our data, we can even introduce company fixed effects. So this might also have to kind of look at if there is any bias in our estimates or if they're consistent across specifications. And here on the right-hand side is really the main punchline of our paper, nicely summarized compactly. We see that there is really a almost shockingly robust pattern of our OLS results throughout 12 different specifications graphed here. In total, we graphed 210 different coefficient estimates for 210 separate regressions. And we see that leading up to the event, there really is no significant market movement. If anything, the difference in cumulative abnormal returns is slightly positive. So there really is no downward trend, but also there doesn't seem to be any real evidence for pre-knowledge in the market. We see that following the event, we really see again this gradual downward movement of the cumulative abnormal returns already found in our classic event study results. And the cumulative returns become also highly significant starting with day 5 or day 6. Also, the estimated magnitudes of the effect is really in line with what we found in the classic event study, namely they range between 2 and 3 percentage points. And we find the largest effects actually for if we introduce company fixed effects, which is, so here we really compare the same company if it is treated, which means it is named in reports of being associated with the event, versus when it shows up in our control group, when it is present in event countries, but is not tied to the event. So this really nicely traces out that publicity effect that we are after. While I will not show you in this presentation, we also show that our results are qualitatively and quantitatively unchanged under various robustness checks. Just for instance, we show that, interesting enough, that these estimated effects are not dependent on a specific country or on a specific offender, like for example, one company that is often engaged in those kind of events or tied to those events. So now looking what is the economic significance of this effect that we estimate? What do 2 or 3 percentage points really tell me? And this means that this translates to a median cumulative loss in market capitalization for the 10 days after the event of about 100 million. It goes up to over 170 million for our company fixed effect specification. So, yes.
Hi, David.
Yes.
Sorry if I missed it, but do you consider days beyond 10 days? Like, do you consider, do you change the time window?
Yes, probably your picture tells more than 1,000 words.
Oh, okay.
So here, yes. So we look also, for example, at 20 days prior and 20 days after, and we see that basically. So while of course the estimate gets a bit more noisy after 13 days or so, we see that that there is no real, we don't observe a reversal in these cumulative abnormal returns. So this really seems to be have an impact on the corporation's market value.
So looking at the confidence intervals, don't you, like, I'm not sure if I'm reading it correctly, but isn't it the case that the effect lasts for 3 to 4 days, some like in the window around 10 days, where it is significant?
So yes, so here so why it is a bit different to the graph that I showed you before is that we have some restrictions on how many trading days a company needs to have during the event window. So one issue is that companies that are really heavily affected might be like might remove themselves from the market for quite a while, and then we don't observe enough trading days, and then they get dropped out of the example, which here eliminates for the long windows a couple of companies that were before present. But yes, you're right. We see the main effects really after, I would say, from day 6 to day 13. And here it is probably like day 8 to day 13, where it's
okay. And in the last slide, where you show multiple graphs in one side, the robustness checks. Oh,
here.
Yep, this one as well. So the confidence intervals here are also, aren't they telling the same, or maybe they're not much visible?
Yeah, they are.
In most of the cases, like it
So-
starts late rather than earlier.
So here's the same, just in table format, which probably helps a bit more to like make the significance visible. So we see that 2 days after the event, we find this significant effects throughout the specifications.
Right, thank you.
Again, it is followed by a stable period, and then starting again with day 5, then they really become highly significant throughout all specifications.
Right, thank you.
No worries. Just sorry for the moving with the slides. I forgot apparently my back button.
David, I was just looking at the previous slide in which you look beyond the 5 days. And it just kept going down. I was just looking. I was just thinking, how long does it take to revert back to zero, to the overall effect to revert back to zero?
I mean, we ran some like even longer windows, but I mean, there is no like, I don't remember the exact day, but it gets really right. It gets really spurious, this relationship, because you can imagine, right? There's so much going on at some point, so many events affecting these companies that we might find an average effect, but it's so noisily estimated that it basically doesn't tell you much. So this is why also this kind of event study literature and finance really focuses on like next these 20-day windows, but that's already usually like already as we do in the robustness, because it really makes it tough to like know, well, what was really the case, right? What is the event? Has something else happened? But yeah, you're right. I mean, technically we could make a graph of 100 days, and I think we did once. There is no reversal in like a heavy reversal, but it goes a bit more like it at some point, I think after 40 days or so, it goes a bit more to zero, but it never goes completely away, at least on average, right? But the confidence intervals get like super broad.
Large, yeah.
Since we are at the time frame, if I may jump in, so why is it that we see the effect so late? Is it just from the cumulative effect, or do we need the accumulation of 4 or 5 days to see the significant downturn? Or is it that we have a lag between the national and international reporting? So you have these national newspapers, maybe investors respond to when it's in the Guardian, and they take 2 or 3 days to report what was in the La Repubblica or whatever. Did you look into that?
That's a very good question, and so I will get a bit more to the role of the media. It's just tough. So we looked at like, well, which articles or which cases might have been reported in the Guardian. This doesn't seem to have like a real impact. That's also so if we just introduce like an interaction term between, well, it was reported in Guardian or not. But one of the issues is that the Guardian only in 2015, I think, made this collaboration with Global Witness, which is the NGO that is really tracing those cases of Earth defenders. And so a lot of the Guardian's articles are really heavily in retro perspective. So they report on events often like 7 years ago. So but one can imagine that financial markets, right, they have like nice information, they get it rather quickly. So as soon as somewhere the information is getting picked up, maybe they even have informal channels, it should pop up with their nicely filtered news feed from Bloomberg or some other vendor, right? Like these guys that are working like the trading, mining stock, it's quite usually a small close group, so they usually get all these pre-filtered events. So I would expect, but still you have this time lag, right? Like even when some journalists in those countries picks these kind of events up, or some grassroots movement gets wind of, well, there was actually this environmentalist killed. So this sensitivity of the information leads probably to a time lag, and then also for markets to kind of know, well, does this event gain traction? Does it? Is there really this publicity effect that we need to fear down the line? So that probably this assessment of risk also plays into it, but it's tough to trace out empirically.
Could you look into when it is published in the country or the language of the main buyers or the main investors? So if you have it popped up in Spanish, let's say in Peru or so, but the main stakeholders are US. So when it comes in the English news media?
Yes, that's a great suggestion. And I think these are one of the next steps in our paper to really try to locate these events in some news archives. Like now that we know that they happen, like which events we can actually find, which is the first article, where is the first publication that we can find. It will be a data intensive task, but I think it is worth going down that rabbit hole. So yeah, that's a great suggestion. That's, I think, one of the steps that we're currently contemplating about doing next. Any more questions regarding our, like, really the main findings here in the paper? Okay, great. Then let me just, I guess I'm running out of time, but just let me briefly jump to like zoom in on the role of the media, and just so what we tried to do is what was already suggested, right? Like what we would want to know is, well, what happens when these events are more prominently featured in the news versus on days when they are less prominently featured. And since it's tough to really like observe the whole universe of news and to kind of like in hindsight try to trace, well, what was the piece of information that investors had at the time of the event, we use exogenous variation in the daily news pressure index to measure or to gauge the kind of media penetration potential of assassination news. So here really we split basically our sample with an interaction term into if the event coincided with a low news pressure day versus when it coincided with a high news pressure day, which are just defined as above and below news median. So, and we indeed find that if the event coincides with other newsworthy events, we find an indistinguishable effect from zero. But if the event coincides with a slower news cycle, we find again these negative cumulative abnormal returns. So this kind of hints really at this fact that the media really plays a crucial role as an information disseminator. And at the bottom panel here on the right, we see that the estimated difference between the effects is significant for most of the days following the event. So I won't have time to get into those, so just a couple of other interesting results. So first, we also try to tackle the issue, well, is it publicity that is at the root of our event? So even if I have not convinced you so far, but maybe you will be like, well, maybe they are just more close, or they are proximate to the event itself, to the violence. So this is what really drives the result. And we tackle this by redefining our control group and just focusing on corporations that have mining projects in the admin 1 region where the event took place. This information is not available for all of our events, but for the subsample, we show that, yes, really it is the publicity driving our results, not the proximity to the violence. And as mentioned earlier, we then look at, well, who are the investors that react to the information? And we find that those sophisticated news-sensitive investors, an example, hedge funds, that react more than the other institutional investors. So just for the last couple of minutes, I would like to unpack the political economy a bit more of these events. So the big question here is that we try to tackle, well, given that we know that there's that we still observe these events so frequently around the globe, and we just saw that there are such like high economic losses involved for the named corporations, why do we keep observing them? And one possible answer is really, well, there might be this local actor that has skin in the game and does not bear the cost of the stock market fluctuations. And this issue is made even worse by the fact that corporations or the parent company might not have a perfect hold on what or control of what those local affiliates or subsidiaries are actually doing. And they might be complicit with some local actors in eliminating the opposition. So as a first cut, we try to kind of look at, well, how does the probability of observing events in relation to a corporation change with its relative importance as a revenue source for the domestic government? And here we again construct a novel data set of tax revenue shares of mining corporations based on data published by the EITI. So what we do is, because in those reports, these are subsidiaries that are usually reported, so we code the historical ownership shares of corporations, and in line with those shares, then distribute the revenues. So we can then basically have the total revenues paid by corporations in a country in a given year. And the tax revenue share is then just the revenues for the corporations divided by the total amount of tax revenues paid by the mining industry in a country in a given year. Then we just estimate a simple linear probability model. We regress here the dummy equaling 1 if the assassination event took place in year Y in country C that is associated with company I, and 0 otherwise on the tax revenue share of the company. And in our baseline specification, we introduce country times year fixed effects, which here also equal report or like tax report fixed effects. And here our coefficient of interest is beta. And just here I would like to focus your attention on column 4, which is our baseline specification. And we indeed find this kind of hypothesized positive relationship between the tax share and the probability to observe an event. So to interpret the coefficient, this means that if the corporation was the sole taxpayer in a country, the probability to observe an event in relation to this very company is 18.1 percentage points higher, which translates to an effect for the average corporation, our data set, to about 1.1 percentage points, which is a 26% increase in the average probability to observe an event. So we still, so this really hints at the fact that there might be this kind of third actor that helps us to explain why we keep observing these events. So just to wrap up, so what I showed you is the evidence that a key strategy, publicizing abuse and naming perpetrators of a key agent in civil society, human rights organizations, really has an impact. It is not just cheap talk. And we find in specific that the disclosure of corporations in association with assassination events of environmental activists leads to statistically significant negative up-no returns, and the cumulative loss for those corporations over the 10 days following the event amounts to over $100 million in market capitalization. Thanks so much for your attention, and yeah, I'm looking forward to your comments and questions.
Thank you, David. It was super interesting. Thank you for sharing. Is there any questions?
Yes, me.
Go ahead.
Yes, please.
Okay. So, David, thank you for a very nice presentation, a really cool paper.
Just a quick clarification question that can you please explain that how did you measure the news pressure? Did you include all national, international news which are not related with the assassination of an activist within a country within 1 day?
So here we rely. I probably should change the slide because it's tough. So we rely on the news pressure index provided by Eisenstein Stromberg, which is the media number spent on the top 3 news segments in ABC, NBC, and so on. So that on the day. So this is in our setting really an exogenous variation because it is almost, I mean, at least not that I know of, has ever an assassination of an environmentalist been featured in the top 3 news segments of at ABC or ABC and those big media TV channels. So this is really so the index itself just captures the media number spent on those 3 news segments.
And do you have the values till 2007 or for the whole data set?
For the whole data set. So this goes back, so they go back, I think, to the 70s in their paper, and nice of them, they updated it after their paper. So it is still available. I think now they probably already included 2019. So they keep continuously update the news pressure index. So that is a really nice service of Stromberg. So we can use it for our sample period from 1998 till mid of 2019.
So
thank you.
Should I?
Yeah, shoot.
Okay, then if nobody else, I go next. So I was wondering about the mechanism or the motivation behind these abnormal returns. So the mining industry is not really a clean industry. So there are probably costs of doing business associated with it. So why do the hedge funds also on punish this news? So is it that they didn't expect this cost of doing business? Or so does it mean that they expect with this, if this comes out, then the really the returns the mining company will achieve in this country will go down, so they expect low returns? Or is it then that they are scared about the people that invest in this hedge fund, so that if these bad news are bad for their clients, and that's why they say, okay, we have to go out of this mining industry or whatever, because otherwise we lose our clients?
That's a great question. I mean, just personally, I would say that hedge funds or investors in hedge funds are not driven by any moral concerns. So I think it's just pure opportunism or like speculation on hedge funds on the hedge fund side. So while it is really tough, and that's a question we keep thinking about heavily, how we can trace out this a bit more. So what we know is, well, the human rights organizations put the spotlight on these companies. But what is really tough is what happens in the aftermath. So that could be, well, maybe corporations that are named and associated with those events are not like will not be given concessions either in the country, like in other countries where they operate, especially in Western countries where some environmentalists might care about this, that this corporation is not considered for the application or like for getting a grant of an application for a concession. So this could be really like in monetary terms. Then while it is less likely, just from what I believe, that there's a consumer boycott, but so like in the case of Royal Dutch Shell, which is probably the most famous case, where in 1998 the military tribunal killed the environmentalists in Nigeria, which led to this huge outcry in the Netherlands and this and the boycott of the Royal Dutch Shell. So this is less likely, of course, with the mining industry, because it's like quite tough to distinguish where your gold come from, and it's usually intermediate goods, right? So there's less, but still, maybe some corporations will drop them from their supply chain that also have a moral obligation to maybe their investors. So this could be another factor that plays into this. And one thing that might really kind of hint at this like reputational costs is some anecdotal evidence that I found, is that some corporations changed their name in the aftermath of those events. So there's one case of an Australian company which has 2 mining projects in the Philippines, which were associated with a lot of violence back in the days, and they changed their name quite frequently after those events. So they were first called Lafayette Mining Corp. I think now, I forgot what the intermediate names were, but now they are like, what are they called? Vedanta Resources, I think they're now called. It's doesn't sound really Aussie, but yeah, so they changed it really like quite frequently. So this is some anecdotal evidence that they might try to avoid these kind of effects. Some also get bought up after these events. That also happen. Xstrata is a famous case. So that maybe the stock market loss might also play into that a hostile takeover is more likely, or that could also be the case. But yes, these are all mechanisms that could be at play. So far, unfortunately, we can't trace out what this, like empirically pinpoint what is really, like what the spotlight does, like what it leads to. I hope we find a way to trace this out more. And if something pops to mind, feel free to shoot me a mail, or if something already popped to mind, just let me know now. We are like eager for any ideas.
Thanks, that would be really cool. So disentangle this expected return thing versus the customers of the hedge fund. So whether the hedge fund also gets an image problem if they invest in those problematic companies, or whether it's really just the expected returns you get.
Yes.
One other question. So in your motivation example, you had this Chinese case where it said that the activists blame this company for killing this leader. So, and can you look into a difference whether it's just so that people assume or blame the company, whether it's really proven? So the company is really accredited with this murder?
We, I guess by choice, also to not run into legal troubles, I guess. So what we do is really we default to the source article. So we do not take any like ex ante any like assumption or presumption on the relationship between the corporation and the event. While it would be cool to do this, as far as I know, I only found one case where there was an investigation which actually led to something, which was one case, I think it was Tau Resources, where they wiretapped the head of security of the mine, and he told the police chief before the protest to kill those nasty protesters. So that was the only case that I found where it could really be like a legal like connection could be established. There are some cases that, well, where there was a case brought forward, but even as mentioned earlier in Western countries like Canada or the US, that usually never leads to anything. So Ruggie gives the example that 500 cases against multinational corporations were brought forward in the US, and one was heard in front of a jury, and 2 were settled out of court for like small amounts of money, and well, that's it. So and in Canada until 2019, no case, like the Supreme Court threw out any case that was concerned with human rights violations abroad. And just because it's recent, I think 2 days ago, there was a vote in the cantons in Switzerland about if it should be made possible to hold corporations, Swiss corporations, accountable for human rights violations abroad. And while in some cantons the majority voted for it, in total it was not enough. So this kind of proposal sadly did not go through. So I have a feeling at the Glencore headquarters there might have been some champagnes popping. But really, like, we can't say if, maybe just as a personal note, I think really what is going on is what we kind of try to discern at the end is that the parent or the head of the corporation is not ordering this. So what is more likely, it's really that local operations either engage in the violence, or maybe the headquarters does not care much about what is going on. If paramilitary units in the Philippines eliminate this mining opposition, they take this like, well, we don't see anything kind of approach, I guess, which of course is really debatable if that's not just as bad. But yeah, I think that what is really what is going on at the ground is probably more these local actors that kind of engage in this abuse, less than that. I don't believe it comes from the top. I don't know either way.
Yeah, thanks.
May I just add to what is being raised here?
Yeah, sure.
Yeah. So I'm not sure, like, please forgive my ignorance on the subject, but why are you interpreting this size of like the tax share as in the way that you are interpreting? Can it not be the case that the higher the tax share, the larger is the relative size of the company in the country, and that gives the country the company kind of a power to do the assassination? Like, I'm not sure, but I was wondering if it can be interpreted in that way as well. Like, it's a relatively more powerful company, and they feel that they can do this kind of, like, they can meddle with people or crush the opposition. I'm not sure if it can be interpreted in that way.
Yes, that's a good point. Yes, I mean, one issue is, of course, I mean, it's just tentative evidence. We don't claim here any causality per se. But yes, one issue might be, well, we just have like these events happen more in relation to big companies, maybe also because those cases are more likely to be reported. I mean, maybe we should control here again for the size, but there are usually more than one big actor in the in the country itself. So you have a couple of really small ones, but like usually private mining companies, and then you have the big players that are usually present in most countries in Central or South America. But yes, that the corporation might feel more secure that they can crush the opposition without any backlash could also be possible. Yes, I personally would say they also have more to lose if it gets out, but that, I mean, I can't disprove that this is what's going on. But if you have an idea how we can eliminate this kind of concern and get a step closer to maybe claiming causality, though I guess it is a stretch in these kind of taxes because there are just like a lot of factors maybe playing into it. But I would personally think this kind of story is probably that we have in mind is the most likely, that there is really the government has a real incentive in those cases to eliminate the opposition. And we also know from who are the perpetrators in those events, often are often, if there's not an unidentified hitman, those are police or some paramilitary units. I mean, in the Philippines, it were like, are these paramilitary units? I guess they're paramilitary units. It could also be just do base former like military units or police units, right? I guess it's it's tough to distinguish them in the Philippines between paramilitary and official state actors. But yeah, so it's tough to know for sure what is driving the results. But that
Thank you. Right.
Thanks.
No other questions? No? Okay, so join me thanking David for an amazing talk and a really great paper.